So far this year has not been too rewarding for investors. What's behind the uncertainty and what might we reasonably look forward to? First, let's think about the economy. Every day there's a new inflation report with conflicting information. On the one hand, the Fed raised rates for the first time in almost a decade late last year. And at that time, they said that they were planning on raising rates every quarter for the next 2 years. But then recently, the Fed called into question that possibility because they were worried about the market and the economic outlook. Now, that was announced when they released their notes from their meeting on January 26th and 27th. Then on Friday, February 19th, annual core inflation was measured at 2.2%, and that's higher than expected. So rate hikes could be back on the table to keep inflation under control. Inflation is important because it's one measure that tells the Fed if the economy is strong or weak. When inflation picks up, it often means the economy is moving along. So as of today, it looks like the US economy is improving. But there are signs that the global economy is slowing, and I've spoken at length about China many times before. That's the core driver of global slowing right now. Anyway, this duality will continue to complicate the Fed's job on the one hand, but it also could make the US market very attractive to foreign investors. So one thing I'm sure of, the Fed isn't going to take any action without really thinking it through, given the current facts on the ground. Even though they committed to raising rates every quarter, I'm not sure they're going to do that. They're probably going to make those decisions each quarter on its own. Now, just as the outlook on inflation changes fast, so does the pulse of the labor market. On the one hand, January jobs reported a steep slowdown in hiring, but the unemployment rate is still under 5%. And there's more confusing information. January sales and output numbers were low, but industrial production rose almost 1%, which was twice as fast as expected. And car makers pushed manufacturing output up by over 0.5%. And that's notable because it's a big change from the slowdown, which was the direction of manufacturing up until now. So we could be seeing a pickup in the manufacturing sector that's ongoing. Housing is another important contributor to our economic growth. Housing starts fell in January and December, probably because of the blizzard in the Northeast. But as you can see, it looks like the trend is still very positive. Last, the dollar has been softening a little, and that's a boost for exports. But you can see that it's a hodgepodge, and like always, there's both good and bad news the market needs to contend with. Bottom line, I think we can expect more volatility in the near future. Besides the conflicting economic data, take a look at this graph which plots investor sentiment. It shows that people are just about as frightened now as they were at the bottom of the recessions in 2002 and 2008, which were extremely frightening times. Now in the past, when fear was that high, the market turned around shortly thereafter. So that could be a good sign that the worst is over, but of course it's no guarantee. At the least, it signals to me that we've got continued choppy waters ahead. Now for us, this isn't a huge problem. First of all, I watch the strength and the weakness in the market, and I shift portfolios accordingly. And while short-term volatility can be an emotional challenge, it doesn't have to be a financial problem if we remember, number one, our long-term goals, number two, we have the right asset allocation, and number three, stick to our plan. If you have any questions about this, just let me know. If you want to review your plan or your asset allocation, let me know. Just call the office and we'll be happy to arrange a time that fits your schedule. Last, if you know of other people who might benefit by reviewing this update or by speaking with me directly, please share this with them and give them my contact information. I look forward to connecting with you soon. Have a great week.